Hello, everyone. I'm Jerry Jones with the O'Hare Wealth Management Team. Welcome to our weekly update for October 22nd, 2025. Every week, we get together with you, answering questions of a financial nature submitted to us by our clients and/or prospects. To that end, if you have any questions you'd like to submit for us to consider on future calls, please do not hesitate to submit them to service@o'harewealth.com, or you can call or text us with the information at 414-644-0060. Today, I'd like to talk about the government shutdown. How is the continued government shutdown impacting our outlook? I've got some notes and some thoughts here, and I'd like to start by first saying historically, U.S. government shutdowns have had a minimal and temporary effect on the overall economy and stock market. The S&P 500 index has generally been resilient, with performance driven more by broader economic fundamentals like corporate earnings and interest rates than by the political gridlock. Our advice: long-term focus. We always advise our clients not to overreact to the political noise of a government shutdown and to stay focused on their long-term investment strategy, which is more influenced by fundamental drivers like economic growth and corporate profits. That said, I'd like to give you a few takeaways in two specific categories. One, key observations. Secondly, the potential risk of a prolonged shutdown. First, some key observations. Limited impact. The stock market's performance during past government shutdowns has been mixed but generally uneventful. Across various historical analyses, the S&P 500 has shown an average return near flat or slightly positive during these episodes. Second, a quick recovery. Markets tend to recover quickly once a shutdown is resolved, and we know eventually they are all resolved. In the months and year following most shutdowns, the S&P 500 has historically posted strong positive returns. Second, duration. Most government shutdowns have been short-lived. However, this one is already on record as the second longest in history and counting. Lastly, under this topic, volatility. While the long-term impact can and most often is minimal, the uncertainty surrounding a shutdown can lead to a short-term uptick in market volatility as investors react to headlines. It's what they see and hear, not exactly what it tends to be fact. So once again, that's just the headlines, not something that's rooted in fact. Next, the potential risk of a prolonged shutdown. As I mentioned earlier, this is already on record as the second longest shutdown in the history of our country. While history suggests a minimal impact, a prolonged shutdown could have some negative effects that may be longer lasting. Four key topics. Economic data delays. Key economic reports like jobs and/or inflation data may not be released in a timely fashion, leaving investors and the markets in the dark when making financial decisions. Two, reduced economic growth. Each week of a shutdown could, and I emphasize could, shave an estimated zero point 0.1 to zero point 0.2 percentage points off quarterly GDP growth, though most of this is typically recovered later on. Three, impact on specific sectors. Companies that are heavily resilient on government contracts like defense and healthcare may experience more direct negative effects from payment delays and/or paused work, which we have seen. And finally, lost federal worker pay, which leads the headlines almost daily, lost contracts, lost services, and most importantly, reduced consumer spending might all drag on the economy if it continues to go on. And we've already heard some reports of these type events occurring from the quarterly reports of companies who have talked about the consumers pulling back on their spending. Not across the general markets, but in specific sectors, they are noticing that consumers are starting to pull back on their spending. In essence, the stock market generally views a government shutdown as a temporary political event rather than a fundamental economic threat. However, the longer this goes on, the potential it has to be worse for the economy. I hope that kind of puts that into perspective, especially from our standpoint. We believe in a longer term focus. Keep your eye on the long term ball, not some of the political headlines of the day. which takes me to our book of the month recommendation, Americana, a 400-year history of American capitalism. There is a separate video that talks about this book more in depth, but I would highly recommend it to you. With that, I want to thank you as always for joining us on these weekly calls. We hope you find them beneficial and useful to you. We always appreciate your feedback. If there's anything we can do to enhance these calls or things that you would like to see us do differently on these calls, please send us that feedback and we'd be glad to try and incorporate that in future calls. On behalf of the rest of the O'Hare Wealth Management team, I'm Jerry Jones. Thank you for spending some time with us.